Traders. Another trade opportunity on the Australian dollar versus the US dollar. This one is quite interesting actually. It is 33 minutes past 10 p.m. GMT on Thursday night, and as I've already mentioned, you guys already know, the daily candlestick closes at 10 p.m. So whatever your routine may be sure to always check the price action, the daily candle close. I do it personally around 10:30, maybe 11 p.m. I do this on my favorite currency pairs, and I look out for potential setups into the new day. So I've just found this on the Aussie. I've been watching it for a few days now, and this is a daily time frame. So what I've actually seen is we've had a very choppy run all the way up to the monthly area of resistance. Now Aussie dollar loves round numbers, 50s, 00s. My monthly resistance is in fact a substantial point for this currency pair, because if I zoom out, you can see that the Australian dollar versus the US dollar, the exchange rate has in fact more or less remained below 7.550 since May, June, July of 2015. Now there's two ways in which this can go. We could pull back maybe 100 pips or so before going long, breaking out, because on the monthly time frame on the Australian dollar we have a moving average crossover. However, monthly candlestick hasn't actually closed yet. The weekly time frame, we have had a substantial bullish run for some time, and the only other thing that is on my mind right now is this potential Fibonacci retracement setup. So I've gone from A up to B, C retracement at the 61.8/62, and the fib extension is up here, -27, layers bang on 0.8100, 0.8090. So overall, from a weekly perspective, I am looking at Aussie coming up higher, maybe 300, 350 pips, maybe 400 pips. That's just something to bear in mind. Now, if I remove this, we all know that the weekly time frame, using Fibonacci on the weekly time frame, and even a daily sometimes, it's not just going to go straight there. It can consolidate, go back and forth between levels before reaching the destination. So what I've actually seen here is, so broke above the daily resistance. We have in fact tested 7756, 7757, and this daily candle here, we can see we've only really closed 30-35% of the overall up move. Yesterday's candle, which has just closed 36 minutes ago, same thing, spiked all the way up, but it's made a sneaky higher high. It's made a new high there, and we've closed probably around 10%, 5 or 10% of the overall up move. What is this, guys? 1, 2, straight through resistance, straight through our area. This is a tweezer top. So tweezer top formation at a very strong area of resistance, 2 major confluences there. So that's more or less why I'm taking this trade. Simple as that. So if I zoom right in, we have a tweezer top formation piercing through 7750. Sorry, my labels are incorrect. We need to go through some of the charts and do a little bit of a revamp. Anyway, 7750. Sorry for that. So yeah, we got the psychological level, the huge boundary of resistance. So why not? So in terms of targets, firstly, let's see what our stop loss should be. So short position, I'm going to enter right here. Enter the minute I stop this video. So bring this in as we do always. Okay, with this one, our high is let's just say 7.760s. I preferably only really need with this and with the majority of our kind of formations, we only really need to use, a stop loss should be used 15 to 30 pips above the wick. In this case, I'm just going to do 20. So 20 above here is, so we've got 7.760s, let's just say 7.780. Let's put it at 7.780. Okay. Now, I want at least a 1-to-1 risk reward on this. So a 1-to-1 risk reward would in fact be, let's just call it here, 0.7613. So we're risking 83 pips to gain 83 pips. Maybe just stretch that to 100. Right, in terms of targets and using a technical standpoint for a potential target zone, the weekly support, this isn't resistance, this is weekly support, may be of some interest. And that's let's just say it's a 1 to 1.5 risk reward. Okay, and the price here is 0.7557. Let's just say 0.7550s. Okay, 139 pips. All right, so with that being said, that's a great setup right there. Me personally, though, due to the overall fib, which I placed on a few minutes ago, I'm just going to go for a 1-to-1 risk reward on this trade. Just here. Just above 0.7600 actually, because remember, psychological level, 0 zeros, we could stall around there. So I'm just going to put it at 7,610. So just over a 1-to-1 risk reward. So I've used my knowledge of keeping up to date with this currency pair for quite some time now. A breach of 7.750's monthly resistance, and the squeeze the top formation right there. I've kept my stop loss 20 pips above the formation, giving me a stop loss of 83 pips, and I'm going for a target of 80, 85, whatever. It's a 1-to-1 risk reward, and I'm keeping my target just above 7,600. Alright guys, that's the before shot. I'll be back to see how this one plays out. Come back to the Aussie dollar aftershot. Friday morning, and we finally hit the target. As you can remember from the last shot, it was a 1-to-1 risk reward. We're looking at risking around 83 pips for a target of 83 to 86. My target has just been hit. Okay, I'll show you this on a 4-hour time frame. As you can see there, Aussie is melting nicely this morning. So firstly, if we just go back to the actual entry on this trade, as you can see, we entered directly from the doji candlestick because we've seen 1-2 rejection through the resistance 7,750. I may have since the last slide gone through all my key levels and just adjusted them a little bit, same with some of the other currency pairs that you may be looking at as well in this section. So what we're seeing is 1-2 rejection 7,750. We plummeted nicely into profit. We came all the way back up, all right, and got the other video up. Yeah, the other video's there. And we came back up. We spiked again 7,750. So that's the importance of letting the trade breathe, and the rule of 15 to 30 pips is our stop loss. So we let the trade breathe there. It came around 30 pips from target, which wasn't too bad. Came all the way back down. We actually hit target here, but that was triggered from the news, and unfortunately the bid and ask, as I said, that widens, and it didn't actually trigger my target. Came all the way back up. I remember I came home and I was quite annoyed at the fact that can happen sometimes. So if there's major news and the bid and ask widens, it can often take the market to push a little bit past your target in order for the broker to fulfill it. It's just how it is. Again, they can blame it on slippage. I went through this in Trading 101. We came back up to entry, and then now, as you can see there, we've nailed straight through the target. So the importance of this is letting the trade breathe. The importance of our monthly key level, reading price action, 1, 2, 3 rejections there, but our entry was after this one. And yeah, you know what, I could probably have stretched this to our weekly support level down here, or even this trend line, which I've recently plotted on the graph too. So I reckon Aussie dollar can come a lot lower and retest this zone, maybe 7 0.7550s perhaps around here. So that's a great trade. It took a few days. 80 odd pips in the bag. We're just studying price action, reading price action. So yeah, I hope that one helped you people, and happy trading. So on to the next one.